Everyone, it's Jeremy from Trading Safely. We've got about half an hour of your time tonight just to run through all the major markets for the week ahead. We're going to do our usual three-step analysis, and we'll have a look at range relativity study. We'll look at support and resistance on a high, low, and closing basis, and we'll also have a look at the weekly time frame for each of the major markets. Pretty interesting point in time. Metals are back in the middle of the distribution, so choppy by definition. Was a buy signal on a weekly basis last week, so it's potentially trying to test higher, but it does have a lot of work to do to get through the 1260 to 1280 zone in gold. Certainly a weekly close above 1280 would be significant. In equities, the rally's continued. There are some early signs this week that the Dow's trying to put in some closing resistance. If I just add the study here, so right now the Dow is trying to put in a closing high here at 21,637. So we'll be interested to see if the Dow can take that out on a closing basis this week, or whether it is in fact sort of turning lower. Interestingly enough, this is often associated with changes in trend direction, where we get a double peak cross. So where these lines cross each other once and then twice, many times I've seen that associated with highs. So just be wary here. We don't have any information yet that the Dow is breaking down, but that is certainly a warning to me. When we look at the Dow Jones from a weekly perspective, now that these peak levels are crossing, I've got this initial support down here at 21,349, and then it's an awful long way down below to other support levels. You've got the monthly bearish and the quarterly bearish down there between 26.73 and 24.53. You've obviously got quite a strong support zone there at 21,000, but just some early signs there with this double peak cross, or the cross of these yellow lines twice, is indicative of a warning in my experience. From a time perspective also, we've got quite a high participation across all the time frames, which is what you need to see to get a bit of a high. So of course we would wait for confirmation on a daily closing basis, and to do that we'd need to add in the daily time frame just for 1 second to see where the daily closing resistances. Well, interestingly enough, they've actually moved up above price as well. So the Dow is actually well placed to move down, but as yet there is no daily divergent sell signal. We've got some indications from a timing level that Dow could go lower here, but we need to wait and see on a closing basis. But I'd say with this double peak cross here, so the cross of these two yellow lines, if you start taking out this weekly bearish on a closing basis now, so that's 21,471. If we were to take that out now on a weekly closing basis, in light of the fact that you've got this double peak weekly cross on a closing basis, then the Dow could test lower, and the supports initially are at 21,000, which is this line here, and then under there you've got pivot support 24 to 26. So let's just see what the other indexes are saying in the US. Have a look at a mini S&P 500. I'm just going to turn this daily time frame off. Okay, so a little bit different S&P. It doesn't have weekly closing resistance building, but it has met its monthly bullish target. Another thing that we've sort of been talking about for quite a few months now is that we've just not been able to close above the monthly bullish pivot at the end of the month yet, and that's 5 months. It's just very, very rare to see that in an uptrend. So maybe this is the month where we do get some sort of pullback. But as we've been maintaining, there's been no reason really yet to be extremely bearish. The qualified supports are still below price. So once again, you've got to be careful about buying at these levels, but at the same time, we're not seeing anything on a closing basis to the downside to suggest that there isn't going to be a move lower. Certainly, none of these monthly bearish pivots have been taken out either. So we're grinding higher, and uh, let's just see how this week goes. But that Dow, that peak cross in the Dow is something to watch from what I can tell. In terms of the Nasdaq, my computer's just thinking. Okay, so Nasdaq, that's it's gone back and made new highs now. It is in it's above resistance, but it is at a high participation in time. Um, Support's down here at 565,725. There's a bit of a negative slingshot mode going on up here. So once again, if this is a false break, then maybe we see the Nasdaq come off. But right now, it's above support for me, so very hard to be selling that. You'd need to see at least break back under support on a weekly closing basis, back under this monthly bullish, and then again back under this weekly closing support. So not giving us much to go on from the short side in the Nasdaq. So while it's above support, definitely reticent to sell it. Really, the market should have failed. The Nasdaq should have failed back in this area if it was going down. So need to be careful with American equities once again. Might just flick over to metals and have a look at commodities. So gold's trading back in the middle of the distribution. Last week it had a closing weekly support formed. What do I mean by that? I mean this yellow line drops under price on a weekly closing basis. So that provided the floor for gold to move higher. At the end of last week, we took out that weekly bullish pivot on a closing basis, and then we've taken out one of our sort of key levels here at 1249.5. So in the immediate, at the weekly level, the immediate resistance is up here at 1279.8. So that's potentially where gold can go, but it does have a lot of work to do in the middle. And if I look down at the study below, that's tracking midpoints across time. So this 1255 to 1267 is very congested, and you can see this big chunk of resistance here as well coming into that monthly closing level there at 1269. So really, to me, it only opens up once we get above this 1280 zone. That's the level where it needs to be above at the end of the week to sort of continue on higher. But the backdrop for gold is still this negative quarterly slingshot mode where we've got this bullish quarterly upper pivot above our annual pivot, and that's what can create energy to the downside. So with the dollar index at the low, gold's been just battling to go up even though the dollar's been falling. So I hate to think what would happen to gold if the dollar starts rallying. And only the end of the month will tell whether the dollar index can remain under that critical quarterly level at 94.66. If it was to rally back above that, sort of come the end of July or August, then I'd be concerned for gold, because that would imply a dollar low, and a move up in the dollar would be negative for gold. So look, right now, gold's stuck in the middle of the distribution. It's got a short-term bullish bias because of the weekly buy signal from last week, but it does have a raft of resistance to get through. So for me, I'll be interested to see what happens now at 1280 for either a close above at the end of the week or a failure and then a resumption of the downtrend. Looking at the weekly chart, that just shows you the continuation buy signal and the resistance up here, and there's sort of the quarterly negative slingshot mode, which can imply a lot lower. You can see at this low down here, we had the same event happen, but from the upside, generating this move higher. So This is brewing there in the background, so just got to be mindful of any failure on a retest of this monthly level at 1269. Silver is probably, let's just have a quick look at silver. Let's just start with the weekly chart. So a few things to note about silver. One is there's lots of long-term time frames sort of building on a support basis. So that blue line increasing and that orange line increasing, they're from the semi-annual and annual time frames. So when you've got rising support on a closing basis in these half-year and yearly time frames, it's telling you that there's a strong trend potentially building. And more recently, we've had rising monthly support and rising quarterly support. So we've got a whole host here of rising support, and that does sort of bode well for the future of silver at some stage, particularly these two higher time frames down here. You know, in the short term, we've got this weekly support formed last week, and it's opening up some, higher resistances up around here at 1732 to 1754 in the short term this week. So that's the immediate targets from there. And if we drop back into the daily time frame, we're going to see a similar thing. Interesting to note, we had our slingshot mode there. So those white dots, they appear when this yellow bearish pivot is below the monthly bearish pivot. When that happens, we look for either a reversal in the opposite direction or a cycle inversion and like a breakdown or a break continuation pattern. But either way, it's typically there's more volatility about. So that marked that low nicely. The weekly bullish right now is there at 1658.9, but really the targets are up here on a weekly basis. So you've got 1711 and then 1754 and 1774 as targets in time on a closing basis. Copper's been pretty interesting. That's been doing a lot of work in the monthly time frame and is at monthly final closing resistance. So that means that we need to basically in the monthly time frame we need to close above this 272.6 level. Just looking at the big picture, copper's also had yearly rising support, which has sort of been responsible for this move higher just now. Bigger picture, the opposite annual candle is all the way up there. So, once these higher time frames here, this brown quarterly level and this blue semi-annual level, at some stage they're going to drop under price like this. And when that happens, it's going to open up a big gap for copper. But until then, right now it's at the top of the monthly range, and it is a good opportunity to see if any sell signals develop there on a monthly closing basis. We are nearly at the end of July now, so in a week's time, I'm pretty keen to see whether we're closing above this line on a monthly basis to get the next leg up, or suggest that the next leg up will be for copper. And from there, you've obviously got these initial resistances right through here, and higher up, let's just add some resistances. Okay, so there's some key levels there at 282.72 copper. So right now, just watching to see if we get a failure or some sort of sell signal at the weekly level for copper, or conversely a breakout and copper's moving higher. In terms of other commodities, a lot of the grains complex has banged into yearly resistance, and when you get to yearly resistance, the next level is yearly resistance becomes yearly support. So I think in the background, in my mind, what's going on is we're seeing the beginning of what could potentially be a change in the commodity cycle. So if we look here, that's the quarterly closing support dropping under price. That's a long-term effect. You can see the market's held that and moved up nicely, and now you're getting semi-annual support dropping under price. The next thing was the market testing this annual level there, and you can see the opposite level is all the way up here, and that's what markets do. Once they come inside a particular time frame, they seek out the equal and opposite. So I do think at some stage you're going to see this orange line here. It's going to drop under price like this, and then you're going to open up an enormous gap for the grains complex to move up. And so I would suggest that that's going to happen over the next, year or so. So I'm watching all the grains closely now, because if we were to take out this yearly level now, 5406 on a yearly closing basis, then it's going to open up a big move for grains, and it's not just wheat; it's across the board. So if I zoom now into the daily time frame, there's that yearly level that I'm talking about. At some stage, this is going to do the same thing as this semi-annual level. It's going to drop down and open up space to the upside. So right now, the market's approaching oversold in the short term. It's coming into a negative slingshot mode. So you've got this double support here. You've got some weekly levels here at 47.40, and then you've got double, and you've got monthly, weekly, and annual pivot support through here. So it's a pretty well supported zone for wheat. So interesting to see if we can get some sort of buy signals out here. Longer term, like on a yearly basis, it does look like we're not far from a major reversal in the commodities complex more generally, because we're seeing it in just about everything. We're seeing, quite a big low in sugar. If I go into sugar now, we've had a long position in sugar now for quite some time. It's just got all the way back to annual closing resistance itself, just the same as wheat did, and is now sort of showing signs of potentially pulling back into support. Conversely, if it's because it's so oversold, and I can show you exactly why we're saying that in one moment. We are saying that because of the relationship between the pivots. So let me explain that again. Very rare this situation that we have at the moment. So there's the yearly bullish, there's the yearly bearish, the two orange ones. Now, normally when markets are in equilibrium, all the other time frame pivots are inside. But now we've got the situation where both of these blue ones, the semi-annual, and both of these quarterly ones are underneath these orange yearly ones. And when that happens, it's like a slingshot to the upside. That potential is building. And the last time this happened in sugar, there was an enormous move higher. So we are long at the moment because of this slingshot, and we are watching it for a move up. And just let me add the closing support and resistances to it, just to see why it's sort of holding up right here, right now. And that's because we're at this annual level. So we're at the lower annual closing resistance. Now the opposite annual level is all the way up there. So once sugar's also another commodity now that's looking to come back inside that orange box on a longer term basis. And once that happens, then sugar could potentially put in a big move higher. So it's building support here. At the weekly level, we saw this support form. We are inside above this monthly level now, so we're bullish at the monthly time and the weekly time frame. We really need to just get back inside this annual closing level to open up annual closing resistance all the way up here. So that's just another commodity that's potentially basing. It may well be that sugar comes back down here and tests the monthly support again. I don't know. It could hold here and we get a rise in weekly support and then sugar takes off. I'm not sure, but what I do know is that we are taking on this annual lower closing resistance, and moving back inside that is indicative of a long-term change. So we're seeing wheat and corn and beans all taking on annual levels, and we're seeing sugar taking on the annual level. There's many markets on the commodity complex that are turning. So I suspect once we've had the next move in currencies like the Aussie dollar and the Canadian dollar, they're putting in squeezes to the upside. I expect that those will probably end up collapsing into new lows. And at the bottom of those lows, you're probably going to see the grains complex and all the commodity complex turn and move higher into next year. So well worth keeping your eye on the commodities going forward for a multi-year reversal. Might as well take a quick look at energy now. Have a look at oil. Oil's been another interesting market since the start of the year. It's not been able to take out a bearish level, despite moving, quite substantial ranges. If I come back to there's the start of the year. If I look at each of these monthly bearish pivots, we've never closed below one at the end of the month the whole way. We nearly came close there, but still we couldn't do it. And then just recently we had some weekly support form, and the markets rallied up. What's catching oil at the moment is it's got quite a strong midpoint zone around here, around this 47.90 to 48.60, and that's been containing the market just recently on the move up, but still to the downside. We're still above this monthly support here at 45.60, which is last month's midpoint, and in fact I think that's probably marked a low today. So for me, we've got weekly support at the moment here, and we're trying to put in a weekly top here. But really, what needs to happen is we need to close under this zone here on a monthly basis now to open up lower below. But we have held this level to the upside. Really the targets are these pivots here, and ultimately the key level for me is this annual last year's close, because that contained the market for much of the year. And should oil get back above there, then it does open up $62 and then further up to sort of the 67 and 74 zone. But right now it is trapped right in the middle of a distribution, and there's been a valid daily buy signal in place for some time now. So no reason to be short yet. There's no sell signals, and there's been a weekly buy signal underpinning it. So really no reason to be bearish at the moment, despite what's seemingly it's bearish. But longer term, while it's under this yearly close, I guess it's fair to say that it is bearish. But I'm just not seeing it translate into closing below any of these monthly bearish pivots. So, and while we hold this monthly closing support, then no reason to get too upset or to think it's going to go lower. Really, you need a monthly close under 41.38. We had a good opportunity last quarter to close under this quarterly bearish pivot, and it just bounced straight off it. So that's fair warning to me that it's not ready yet to go down. What else can we look at? Might be time to flick over to some of the currencies. Let's have a look at dollar index. Dollar index, the key level now is quarterly closing support at 94.66. That's the big one for me. And let's just take a quick look at the weekly chart. I might just turn off. So this was a big moment right there when this quarterly closing resistance moved to the top. The price came back in. When that happens, the market seeks out equal and opposite time frame. So by that I mean when this brown line moved to the top, you instantly look to the lower brown line, and that's exactly where the market went to. And you just see that over and over in markets. It doesn't matter what time frame. So we really need to see dollar back above this 94.66, especially seeing as we've got this quarterly slingshot mode setting up where this pivot's got the brown dots. That means that we're below the quarterly bearish pivot right there is below the annual bearish pivot, which is a sign of being quite overextended. And you can see in the same one set up here, we had this big move to the upside. So that may be the case that we're setting up for that. Only time will tell. So we need to see if the dollar can get back above this level at the end of the month, and if it can, then this slingshot zone that slingshot mode can potentially kick in and dollar reverses. But only time will tell, and you need to wait for the end of the month to see whether we're under this 94.66 or over it to get the direction, and that's obviously going to impact on all the US dollar pairs, euro in particular, because euro is at pretty much the opposite and equal of this chart here. Back at the low, it had quarterly support formed, so we had this brown line right there dropped under price, and that's enabled a long-term support to build for this move higher. But as that quarterly support formed, it opened up the equal and opposite quarterly level here, and that was the target, and that target's been met. So now we're at a strong resistance zone, and only a monthly close above this 117 zone is going to lead to a much broader correction up to 129. But you can see the support that's formed here over time. We've had this quarterly line drop, we've had this semi-annual line drop, and each time it opens up the next time frame. So right now, the euro is at a critical turning point, and if we manage to reverse from here and take out 113, then that's this sort of the yellow weekly level, the short-term levels. If we were to take out the 113, then this rally could be over. But equally, if we close this quarter, come the end of September, we're still above this whatever that pivot there is, 117. You can bet your bottom dollar that we're going into this zone here, and we could get a very, very nasty squeeze. And ultimately, that could still turn into a collapse down if we got rejected from that level and back into new lows under here. So Aussie dollar is another one that's everyone was bearish, and yet when you look at the support and the resistances, it was saying the opposite. So I might just pull off the pivots here and just clean this chart up a bit so it's a bit simpler to understand. So on the Aussie, the warning signs, I mentioned this a few weeks ago, but the warning signs were everywhere. We saw, a while back we had this quarterly level drop acting as support, and then you can see through here we had rising monthly support, and then this one here was a big thing for me. You had rising quarterly support, and then to boot, more recently we've had this semi-annual time frame drop and create support. And by closing the month above this quarterly resistance here, it's opened up this big gap. Now, the one thing, however, about the Aussie is that if we go back and have a look at the support for the Aussie dollar, it's actually falling. So I have to go all the way back here, back to 2010, but that yearly support is actually falling. So that means that this move up can be just temporary, and then the market ends up back down here. Now, to show you a market that I think is putting in a base and that looks very much different to this, to show you the other side of how things can look when they're putting in a low. Well, here's gold. You can see gold. It's got rising support, right? So that's why I think the gold is going a lot higher, because gold hasn't stepped up like that since I was probably a young kid. Yeah, I mean, you've got to come back to 2000, 2001, since this is the last time that this changed for gold. So something is up with gold, and this 1152 is now a critical zone. So I just wanted to show you there the difference between gold, a gold low, and an Aussie dollar low. The Aussie dollar support on the yearly time frame is still falling, so that's why I think you just need to be very careful about this reactionary move higher It is on a long-term basis, so you can get a bit of a squeeze, but I just don't think you can rule out the Aussie putting in new lows after this rally sort of peaks. And it's the same with the Canadian dollar. It's going through exactly the same move. It's held annual support on a closing basis. Okay, you can see right there, there's the annual closing support, and look what the Canadian dollar did. It held it. Now, obviously there's levels up here at 86. That's a pretty big one, but obviously this is the key level right now, 82.50, which just corresponds with that high. I'd like to see a little false break of that high, and then the Canadian dollar turn down. So note once again how this is creating support, but the support is not rising yet. So really, at some stage, you want to see this orange line. We want to see it rising like this, and so that means this move up is a reaction, and it's going to come down at some stage and test support. And it's a good chance, given the nasty trend that it's in, it is a good chance to be back down here at some stage. So this is a reactionary move higher at the moment, and really it would have to get over 86 on a yearly basis to really say, okay, well, that's fine, this market's going higher. And given the trend that the dollar index is in, just don't believe that. Looking at the pound, pound's trying to build weekly weekly resistance this week, and it's been doing a fair bit of work. It's been trying to get up, but yeah, quite choppy at the moment. If I just add back the weekly levels. Okay, so you can see right now this yellow weekly resistance has moved up at 13124. That's kind of the line in the sand now. So if we start seeing pound closing above that at the end of the week, then it's obviously testing out this 135 zone, which is an old yearly low. At the moment, there's no valid sell signals on it, and it's leaving me with a fairly indifferent taste in my mouth. You can see long term here, the annual time frame's been down, so this is definitely a reactionary move at the moment. Only a close of a 135 would open up 148 and above. So at some stage, the pound, like most of the US dollar pairs, is probably going to undergo a pretty serious reversal. Now that may not be until next year. It all really depends on how the dollar index goes. I think next month, because we are at this quarterly critical closing level for dollar index, and if we do close under 94.66, there is a big gap, and that can fuel a rally in all the US dollar pairs, which would then turn into a savage reaction to the downside, from what I can tell. What else have we got? So I've done grains, sugar. Probably the last one to have a quick look at is bonds. I'll just have a look at the weekly chart of US bonds. It's fair to say that the major high in bonds is most certainly in, and the really critical level is this one here, 147. And the reason I say that is because that's the upper yearly closing bullish level. You can see the bearish one down here at 128. So on the one hand, we've had this closing quarterly resistance form and this closing semi-annual resistance form, suggesting that there's quite a big high in place. At the same time, we've got this rising quarterly and semi-annual support. So all of that tells me that there's still good support for the bond market. But I tell you what, under here is just a car crash, because you're effectively saying that the last time frame left supporting it is the yearly one at 147, and then everything else, all the other time frames will be like, tying a rope around its waist, and letting it drop into the ocean. So it is in big trouble under 147. So keep your eye on bonds for that opportunity. I still think this is a major high, and at some stage bonds will break here, and and it's going to get messy fast. So there's a good opportunity there at some stage. A lot of the other bond markets are similar to that. Just watch for that. Just have a quick look at dollar yen as well. I know there's a couple of people that are interested in that one. You know, when we look at the closing relationships, it's fair to say it's fairly trapped at the moment, and by that I mean just stuck in the middle of a range, as opposed to bouncing off support or failing at resistance. When it's in a range, it's generally one you avoid. So it is at a critical weekly support there, 110.334. If it fails through there, then you're obviously retesting the 108, 108, 107, 108 zone, with the major supports down here at 103 to 101. Just looking at the composition of this trade, of this market, we've got, on the one hand, we have rising semi-annual support, but we've got quarterly closing resistance, and that's just indicative of telling you a market's trapped in a range. And not only that, if we break under this weekly support, you're just going to head back to the middle of the yearly distribution, the yearly closing distribution. So dollar yen's a bit of I don't know, it's not the nicest of markets to trade, but keep your eye open for a weekly close under 110.34. That would seemingly suggest that we test 108 and then 101. Equally to the upside, we want to be taking out some of these monthly levels. I mean, that's a critical one up here to me. That double monthly quarterly level at 117. If you get a monthly or quarterly close over that, then it's really going to have a go at 120 and 122. And there is a big gap after this 125 area, all the way up to you've got to come back on the chart, but all the way up to 147 dollar yen can go. So that's dollar yen. I'm not going to say too much more tonight. There is the Federal Open Markets Committee meeting tonight, so I do expect to get a fair bit of volatility on Wednesday, and let's just see how it goes. So the main messages are there are some warning signs on the Dow. I've had a double peak cross there, so I'm waiting for a confirmation to the downside. The energy, oil markets, oil to me is still not showing any bearish signs, and therefore is sort of bullish in the intermediate time frame. It did have a bullish close last year. When I look at the commodities complex, we've got, I think, a long-term rotation going on over the course of the next year. I do think you're going to see the low end of commodity in the commodity space, and you probably get some pretty big moves coming through grains and sugar and the metals as well. So I hope all that helps. Don't forget to check out www.tradingsafely.com.au and our subscriptions, and I hope you have a great trading week.